Today's weakness was not compelling that there's been a major change of investor sentiment in the fact that the Dow did come back down to the 50-day moving average and showed a bounce from there. This also kind of looks like it's in alignment with this down or the bottom of this trend channel. But the fact that they bounced it off the 50 is probably a very observable indicator, especially if the NASDAQ didn't do anything of any great importance. It was also evident in the NASDAQ that although it traded off lower today, it wasn't a very decisive selling, in that it closed pretty close to where it opened, or at least the high end of the trading range. This is an indecisive selling signal, kind of your hanging man hammer type signal, where the bulls and the bears are still kind of indecision about how far they want to sell the NASDAQ. And the most important factor is that they still close the NASDAQ well above the T-line, which keeps our simple rule that as long as they close the index above the T-line, we're still considered to be in an uptrend. Once they close the NASDAQ below the T-line and the Dow is selling off, that would be a good indication that the bears have taken control. During this downtrend, we were still buying positions in situations like KERX, a biotech, because it did a doji gap up, and it's coming out of what looks like a big fry pan bottom, and notice where it was trading. It was trading above the resistance level, actually kind of using the recent resistance level as support. So there are still opportunities to make money on the long side, even though the market is heading down. But the more compelling charts are the sell signals. For example, in FCX, we had a left-right combo with a gap down below the T-line. It's still heading down. Where's the likely target? Down here at the 200-day moving average. So trying to have some positions long, that we're still looking at some situations where it's better to go with the flow than it is to try to fight the market. So there are good long positions and there are good short positions. Again, the patterns, such as a J-hook fry pan bottom pattern, as we can see in HIMX, which was one of our recent recommendations, backed off, but it backed off indecisively, came down to the support levels and bounced back up. This still becomes a strong buy if it opens positive tomorrow, going into wave 3. Once again, the Japanese candlestick signals and patterns are the accumulative knowledge of everybody buying and selling during any particular time frame, and from the lows they were buying today, closing near the top end of the trading range, even though everybody could see the markets were very soft. That'll be it. We'll see you in the chat rooms.